you to join us here every day, join our community, see what Mike is doing, our other traders, and I post here as well. We are sponsored and powered by TradeView Markets. Check them out, competitive spreads, can trade almost every instrument, including futures. So I want to start off with the euro because that was how the week started. So when I was with you on Monday, we were trading up here at the 102.70, 102.90. This was Monday here. And my narrative was that the euro was going to make another trip under the 101 level. I actually put out sell in the main room, in the main chat room at 102.55. So people have partial profits going into the NFP number that we have on Friday. So right now it'd be about 80 pips. The best levels was even better. And it's interesting, I came up with this target based on between 61.8 and 78.6, which means it's going to take out the low that we put in on the Fed. And I believe this is going to be a buying opportunity in the euro with stops under the low right here. And I want to show you how short-term work can end up lining up or confirming what a swing target was. So from the high that we had at 90, I believe it was 94 we got up to. And just for a frame of reference, this is really the bull bear line at 103.20. So during this first phase of dollar weakness, the euro really it put on a weak show compared to something like the Aussie, which was heading up with a much better trend, even starting to test this wedge breakout again. But getting back to the point of how you could have a target that as the market proceeds and progresses can actually line up with a number that you have. So, let's say maybe this is a left shoulder and this is a head and we're developing a right shoulder here and we have a breakdown, or consider this pretty impulsive move, got here in a hurry, and now we might just be putting in some type of bear flag. And if you measure this, it's from the high of 94 to the low of 50. 101.50 is 140. Okay, so say we break down under this low, 101.65, or call it 60. 140 subtracted from this gives you that par 30 range, which is down at this 78.6 level, which is down here. So meaning that we still have some ways to fall. This is just a speed line that's going to come in right around the same level. Here we are just above the 78.6 level. Here, let me squeeze it in. So here's 78.6 at par 20. So a bear flag's going to take it down there. I think it's going to be a buying opportunity. Also want to show that euro pound, which has been under pressure for a while, is close to approaching its 78.6 level as well, from the low at 82. That comes in at 83.14. And we're starting to get some nice divergences developing here. This was a new low with some glaring divergence. So another 50 lower or so at the 78.6 level. After the NFP, if the dollar is rallying because we have a better than expected employment report, the other facet that's going in is, the dollar was benefiting from rates declining and yields falling, and that came to an abrupt end yesterday as the Fed begins to walk back what the market thinks is happening. Even the most dovish guy in the Fed, Neil Kashkari, is sounding like a hawk. So the Fed doesn't like the market's response to the statement, and now they're pushing back that they're not done tightening. So I look at this yield chart, and I don't know if we're going to go to new highs, but you just look at this, and maybe it's just an ABC, but halfway back, this was a full basis point, 3.5 to 2.5. Why can't we rally to 3 or 310? And during that period, the dollar's under pressure. We start to get some type of correction in the equity market, maybe from higher levels. Perhaps we're not there yet. I could see another high. Equities actually acting very good in front of everything. Just a quick look at the and then I'll finish up with the currency wrap up. This is your NFP preparation video. So you look at the S&Ps, and you had this, big squeeze breakout, and these last 4 days really holding up pretty good, especially since yields came back and oil was under some pressure. I believe there's an OPEC meeting today. Will 94 hold? But anyway, I think that we're getting closer to this part of the rally. I'm not getting bearish looking for a crash. I'm looking for a correction though. And if you see the 4-hour chart in the S&P, you have a confirmed high here. You're starting to diverge here. And people go, well, look, Dale, you have a divergence. Well, you know why you don't? Because we didn't make a new high. We need to make a new high to call something a divergence. It was a lower high, not by much, but a lower high. But now if we get a higher high, 41, over this 4150 level, I don't think we'll confirm on the 4-hour. So that may be it, maybe late this week on the NFP, early next week, and we enter some type of corrective phase here. But that's a plan I have in euro. I still like the pound. BOE meets tomorrow. If we get the same reaction that we got to the Aussie, the Royal Bank of us, RBA, they raised rates, and yet the Aussie sold off. If that happens in cable, especially going into the NFP, something I alerted viewers to, you could just go back to the video and take a picture again. This was a 3 drive to a bottom. This was a falling wedge that we've had a breakout from. And I think anywhere, right around this 120 level, 19.5, do your fib work from here to here and scale into fib retracements, wrong under the low. Now, the yen recovered with yields. Okay, so the correlation's pretty good. And I think that the yen's going to have trouble between 34.65. Was talking to Greg Horvat today. He's an Elliotician, and he had structural resistance, wave resistance, where these two moving averages on the daily meet, around 34.60. So, that would still, that's up here. 34.60, outside shot of 136, but just like I don't think yields are going straight to new highs, I think this is just the first wave down that we've had in the yen. And what a wave, right? So, as long as we're not back above 136, I'm bearish yen, and think that we could fall all the way back down to long-term 200-day moving averages towards 120. So that's how I'd approach the yen. Dixie, it would come in, say about 107. I have some fibs here, 107.67. Right now, it looks like the dollar's forming. It had a nice little pop yesterday, nice reversal day. Look at where it held. And, this was something that, benefited the call to, sell the euro the other day. But this was a 50% retracement and a 50-day moving average coming in at the same point. So a lot of dollar bulls are going to say we're going to make a run to new highs. Anything's possible. I mean, the RSI did not diverge up here, but I'm leaning more towards this. This was wave 1 down, a completed wave in the dollar, and I want to sell retraces here. And something else, remember we were talking about 105 was a previous high. Okay, it was, back here was an important level, 105 even, and that's where we got to under yesterday's low in the dollar. there's lots of room for it to fall. To 102. I think we're going back to par. So I'm looking at any rally that we get, a retracement rally, to be a seller with stops over the high. My preferred long, and the one that's still acting the best, is Aussie. And as you can see in the Aussie, it's playing with this wedge breakout. Didn't quite get there. It looks like it on the daily, but it held a moving average here. We could still trade all the way down towards 68.70, which is, about 80 pips from here. I would attempt longs in Aussie, see if it holds this wedge line for one more test. But I'm looking for these highs to be taken out. And I think that's about all I'm going to cover here today. So that's your preparation for the NFP on Friday. I think we might surprise the market and have a stronger number than expected. Maybe that helps yields continue back up to the upside, and a continuation break in the euro. I was saying sell it at 102.60. That's up here. If these videos are helping you accomplish and adding value to what you're attempting to do as a trader, be patient with yourself. I've interviewed many people and, some of the best traders on the planet. And it takes 4 years to really make breakthroughs. You could speed it up by learning from good people. Find yourself a mentor and a community, and that should accelerate your learning process. But you can't learn it. You have to live through stuff, and that includes adversity. If that scares you, there's no law that you have to trade. Find something else to do. And tomorrow, speaking of interviews, we're going to have the Melt Up Bull. David's going to be with us at Dave H. Contrarian. So highly followed guy, been under a lot of heat on his Melt Up call. And it's going to be great to catch up with Dave and see where his narrative is at. So don't forget to tune in then. Same time, same station, 9:30 a.m. tomorrow for David Hunter. And I know Mike will be with you guys in about an hour and 18 minutes. The guy is a machine. I rest my case. And remember, most of all, don't just count your currencies or your gold coins or your tech stocks. Count your blessings. Join us here at TradeGATEHub.com and check out TradeView Markets, our sponsor. And that's a wrap for me. Good hunting into the rest of the week. Adios.